We are live. Welcome, folks. Okay, another Thursday night, and how do we get this off? Here we go. And we have a lot to go over. Okay, what we're going to talk about tonight, obviously, the equity market. Have we hit bottom? Has the stock market hit bottom? Or is there more room to go to the downside? Where is the bottom for at least a short-term rally anyway? We'll talk about catalysts that can continue to send this market down lower. We're going to talk about China. We're going to talk about the US dollar. We're going to talk about things that we like. Now, normally when I go live, I'm in preparation for a big sell-off. We're in that big sell-off. Now I'm in the mode of, okay, what's on sale? Where can I sell premium? What can I do here to the long side to take advantage of a counter trend rally? We already have a short position on. We're bias short the market. We're not heavily short, but we have a lot of liquidity and we can do a lot of things here. So we're looking for opportunities now that we have some blood in the streets. And in the coming days, we're going to put a lot of capital to work. Now, most of that capital, believe it or not, is going to be to the long side. However, I'm not going to be buying stocks. I'm going to be selling puts, deep out of the money puts, going out 45 days. Then when we get that counter trend rally, what am I going to be doing? I'm going to be selling twice as many calls, just like we did with Meta, Facebook, excuse me, what do we do with? Microsoft and Netflix. So we'll talk strategy tonight. If you are an option seller like I am, and if you are, please leave a note in the comments. Be careful. Be careful with these tight spreads on um, on expirations that are less than 30 days out. Be very, very careful. You want to go very, very far out in time and very, very far out in price. You're not going to get paid as much in theta decay, time decay. However, you'll be safer. You'll be safer, and you'll be able to strategically build a position using the charts. So that's what we're going to talk about tonight. So how's our week so far? How are we doing? We're doing very good. I'll be honest with you. We did have one setback. It was a speculative play. Hawaiian Electric Utility, something like whatever it is. That Hawaiian Electric company that went down 60%, went down further today. So we're in that. I have a naked put down at the 10 strike that we're above that now. We have a bunch of common stock and not a lot. We have common stock and we have a call spread on it as well. So obviously we're down a little bit. We were up 7% on the common stock. All of a sudden, within 5 minutes, we were negative on the entire trade. But that's the breaks, and that's why you got to stay small with your every trade nowadays. So let's get to it. Let's say hello to people. Seymour Rivers, welcome. Thank you for being here. Franklin, the man, the mission, the gentleman. RB, welcome, pal. Bob, you're loud and clear. Thank you for that. Love that. Thank you. Seymour, thank you, sir. Mr. Pete, welcome. And Ramon Te Slip. Cool name. Aristocratic, in fact. Boy, Bitcoin started selling off hard just now. Did it really? Ugh. Ooh-wee. Wow. Wow. Very interesting. Thank you for that. Hello to you, sir. Denny, welcome. Time flies. All square sounds looks great. Sure, sure. Yeah, we'll do chart requests tonight. I got to check the members area. I have a hard stop at 7 o'clock tonight, folks. So just be aware. Members will definitely get to all of your requests. TZ Burton, welcome, sir. Okay, let's get to it. So what we want to do is we want to set the stage for where we're at. What's the pulse of the economy right now? And usually I come on and I say, there's more corruption here, there's more corruption there. It doesn't necessarily need to be criminal. It could just be intellectual dishonesty, and that's enough for me to say, you know what, it's criminality. Because when you take a look at the Atlanta Federal Reserve, who's usually pretty good, when they come out with an expectation, they guide lower consistently. And right now, the Atlanta Federal Reserve, I think, is off of its rocker. The expectation for Q3 of 2023 is now above 5% growth on a quarterly basis. That's bananas. And in the blue chip consensus, we're down. We're negative. We're in negative territory. So there's a very, very big divide that's opened up between the Atlanta Federal Reserve and market participants. So I'm not sure what they're smoking over at the Federal Reserve in Atlanta, but I want some, okay? I want some. So this is the environment our government is. And yes, while it's not a part of the government per se, it's part of the government. The Federal Reserve is a part of the government. It's a quasi-governmental agency. So when you take a look at where we are in terms of market sentiment, the last time we spoke was up here. Now people are waking up. Fear is beginning to hit the market. And the bullish optimism that we had only a couple of trading days ago is gone. It's really dropping off. I shouldn't say it's gone. It's dissipating dramatically. Now, the problem for these folks is that they're a little bit too late for their own good, because when you take a look at the volatility index, it broke out on the 15th and didn't look back since then. This, in all probability, is moving up higher. So fear is now re-entering the market, and that's when people do stupid things. They'll think that the market can't go lower, and it does. This is not a market you want to go buying the dip in right now, because guaranteed, as sure as God made green little apples, it's going lower. But I started this out saying we're looking for long opportunities, and we're going to talk about that. There is optimism out there, or a reason to be optimistic about making money, which is why we're here. We're here to make money. I don't care if it's the long side, short side, buying stocks, shorting stocks, selling premium, buying premium. It doesn't matter to me. So we are here to make money. We are market indifferent. Right now, our bias is to the short side. Therefore, we are looking for opportunities to lean into the short side. Would I lean in more short right here, right now? No. We're going to go over why in a moment. Shiller PE ratio. We are still holding the 30 handle on the Shiller PE ratio. So for those folks out there saying, wow, stocks are on sale. Yeah. Versus 2 weeks ago. I mean, they're not on sale. They're very, very expensive. And the Federal Reserve's balance sheet came out tonight, and it dropped like a rock this past week. They continue to roll off debt off of their balance sheet. They could be below $8 trillion this time next week. Why does this matter? This is the Federal Reserve coming in and tightening lending standards. They're tightening money supply. They are rolling debt off of their balance sheet, and you're seeing yields move up higher because there's so much supply out there. Now, why do I believe the market is going to continue lower? What you're looking at here is a milestone on the 10-year Treasury yield. Where we're at right now is an area that, on a technical basis, people will say we haven't seen mortgage rates going back to since 1990, but they won't tell you from a technical perspective where we're at on the 10-year yield relative to putting on risk. Our business is about managing risk first, not making money. It's about managing risk. And when I take a look at my special charts like this one, and I think to myself, are you in a bullish mood or in a bearish mood? I am bearish as heck. Why? We have broken out above last year's highs. Granted, we still have a couple of months to go in the year, yet this is a pretty good indication of where we're going in the coming months. I think we're coming up to a 5 handle on the 10-year yield. Equities will not be trading with a 30 handle on PE with a 5 handle on the 10-year yield. Guarantee you that. They will not be there. What else is going on out there? Nobody's talking about this. Oh, I'm sorry. They are starting to pick up on it. Off the Twitterverse. Note that each significant 2s versus 10 bond inversion, a recession gray bar soon follows. How long have we been talking about this? Now people are starting to wake up to reality. But they should have been positioned a long while ago. Did you sell your gold stocks months ago, silver stocks months ago? You should have, because this was all in the cards. We still have some silver stocks and gold stocks. We didn't get out of everything, but we got out of a lot of it. The leveraged ETF, we got rid of a lot of it, but now I'm looking to get back in. And we'll talk about that. Yield curve. This is a quarterly chart. 1 month left to go, a little bit more than a month left to go. Breakout. We have a breakout here. And this is this hasn't even updated for today yet. Let's refresh this. Now it's updated for today. Still a breakout. And let's take a look at the monthly chart, which is the one I usually go over on the live streams. Let's drill down. 20-year view to get a close-up here. And we're right at resistance, right there. This is the primary upper band of resistance. Now, we want to take a look at a weekly chart. How are we looking? We are steepening. This is when things get rocky for stocks. So are we bearish? Yes. Are there opportunities to be had to the long side? Yes. Skip economic data. Let's talk a little bit about U.S. economy and the Chinese economy. Let's go to China first, because I think this is the biggest problem. Furious investors protest outside China's insolvent shadow banking giant after it misses payments, warns liquidity has suddenly dried up. You ever heard of Evergrande a few months ago? Remember that one? Poof. This one is bigger. Poof. They're blowing up over there. So what are the Chinese officials doing over there in response? Chinese police pay cordial visits to homes of angry Zhongguo investors, urging them, do not protest, or you're going to jail. You're going to jail. Lose your money and shut up. Clock is ticking down on stimulus bazooka in China. So what the Chinese are getting ready to do is unleash holy hell on their economy to try to beef it up, because they have record high unemployment rates for their youth. What does that mean? Unrest, civil unrest over in China. Now they have the digital yuan, the digital renminbi. They can lock down anybody's account, and basically it's a prison over there. And they want to bring that here. But ultimately, people aren't. If they rebel, they're going to rebel in big time. Police will get sympathetic, and they will roll over on the government, and the government knows it. Beijing bullies banks into buying routed renminbi. That's their offshore currency. I'm sorry, that's their. I always get this confused. Yuan is their offshore currency. Renminbi is their onshore currency. So the government's telling the banks, listen, you got to step in here and put some money to work and help the government out, help a pal out. And those banks will now go under, much like what we did here to our banks by making them buy uh, uh, zero interest rate relative to inflation, zero interest rate bonds. And you're wondering why the regional banks are blowing up. Now, as we come over to the United States, U.S. leading indicators tumble for a 16th straight month, signals economic activity likely to decelerate. Wait a minute. Hold on. Let me get. Yeah. Is this the Atlanta Federal Reserve? It is. It is. Listen, I'm looking at this article about negative growth here in the economy, yet your projection is for 5% quarterly growth in Q3 of 2023. Is that accurate? Hello? They hung up. So economic data is coming out, dropping like a rock. You have China, which is blowing up right now, and continuing jobless claims, which were released today. They rose last week. California initial claims plunged because everybody left. Anybody that can work over in California is gone that didn't have a job. Love you, Talon. He's over in California. Got to be careful. All right, to the U.S. dollar. And now we're going to talk about opportunities in this market. And then we're going to talk about Bitcoin still in free fall, huh? Bouncing back a little bit. All right. I'm not going to worry about it. I just dollar cost average in. We don't have to go over this. This is Japan. All right. So another blow to the petrodollar. India and the UAE, United Arab Emirates, complete first oil sale in rupees. Boom. The petrodollar is now dead. It's dead. It no longer exists. So what the dollar is living on right now is a flight to safety in an equity market that is in big, big trouble. And it's the least dirty shirt in the room. The however is that I don't think that this is sustainable. Is there more upside to be had here? This is a monthly chart. Yes, there is. However, I think that at some point in time, the US dollar, and I'm talking about the near future, the US dollar is going to peter out. Now, what you need to worry about when the dollar peters out is this. So this is a 20-year treasury. You can bring up the 30-year, doesn't matter. 6 of one, half dozen of the other. This is breaking down, okay? It has broken down. Bonds are in a bear market. This is going lower. Now, the only reason why the stock market is in a massive free fall right now is because of the greenback. The problem is that the greenback is on life support right now. And the ice beneath it is gradually melting beneath its feet. I'm not happy to say that. I'm an American. I'm very, very sad to have to say that. And life here in the United States is going to change and change dramatically. The powers that be in government know it. They have known it for quite some time. They know we are insolvent, and all this foolishness that you're seeing get instilled upon us right now with control, lockdowns, things like that. That's just to keep you out of the streets with your guns. That's why they want the guns out of your hand. So they worry about that. Just like the CCP does over in China, the government worries about it here because they are corrupt. And this is not Democrat. This is not Republican thing. This is an anti-uniparty thing versus the people. The government, Both the Republicans and the Democrats are at war with the citizenry because they have robbed this country blind. They continue to rob this country blind, and people are waking up. They are waking up to the thievery that's going on. We have a president that should go straight to effing jail, along with his entire family. And people are finally waking up. So, how long does the confidence in the greenback last? I don't know, but it doesn't look good. Short term, it looks okay. And maybe we'll spike out of this, what I call a bear flag setup. And maybe we'll break out to new multi-year highs here. I doubt it. I really, really doubt it. I think that we're going to get a massive sell-off in the equity market, probably a big boost in the dollar, and then it begins to roll over. And what you need to worry about, really, really worry about, is this. This is why I brought up this chart. When you get the bond market, not the yield, but the bond price declining along with the US dollar, lower highs, lower lows on both, that is a crisis of confidence in the United States of America. And there are things you're going to want to buy. And one of them is going to be gold. Now, I have not been a bull on gold for several months now. I have been bearish on it, and rightly so. This is a monthly chart. We are at the lower band of support. Is it time to buy? I don't think so, because the dollar still looks strong. So I don't really care where gold is per se. I care about the dollar. And I want to know if the dollar is done going up. Has it broken support? And if it has broken support, then I want to look at gold for an entry point to get long. And I'm not talking about buying the GLD common stock. What I'm talking about is buying the physical, which we already own, and going out and buying long-term contracts, option contracts on the GLD. Why? The reason is that they are cheap. They are very, very cheap, meaning the options. This IV percentile, I think it's actually risen a little bit, but it's very cheap to go out, very, very long in duration on the options. And I would be looking to go out probably to late 2024 and buy long dated call options. But I would buy in the money options and then sell a deep out of the money commensurate call against it, setting up a call spread. And that call, which I sell, helps finance the trade. So that's the game plan when VIX is spiking after hours here. That's the game plan for us, the contrarian trader. And if you're not currently a member, sign up for the 14-day trial. Sign up for the great sales pitch. Sign up for the 14-day free trial offer below. And if you're not currently a member, you're not ready yet, fine. Sign up for our live stream. Click the notification bell. Get to know me. And also, we have the 30-minute chart club. We meet usually on Saturdays. In the summertime, it's been a little bit slow, but there's a link below. Join our 30-minute chart club. That is a private live stream. And I may even be doing some private group stock chart requests as times get bad, and be using that email list to go out and say, listen, we're going live. We're going to go over some charts. I only want people that are dedicated to the channel to join in, and of course, members. And so just use that link below, sign up, and get invited. It's a private live stream. You can see the replay, but it's a private live stream for a couple of different reasons. So weekly chart US dollar continues to press higher here. And what you want to do is right now, you want to take your crayon out, much as what we did on the monthly chart, and say, okay, where is resistance? Guess what? We're at it. So the reason why I'm focusing in on the dollar so much right now is because what I saw intraday today, I found pretty interesting. And that was, we began to roll over today. And we've been pulling back, But this to me has a sense of being pretty extended. And I think that we are going, look at this bearish divergence on Stoch RSI. I think we may get some weakness here on the dollar. Now, checking gold in the after hours session /GC. This is the spot price. And yeah, it's up already. We hit 1914 at the lows today, still below 1925, which is resistance now, was support. I'm looking for 1900 on gold. Let's take a look at the weekly charts and how we may close out the week. One trading day left to go, folks. We went over yields, weekly chart, breakout. TLT, breakdown. We went over that already. Tips, Treasury inflation protected securities. With the dollar rallying, yields rallying, you do not want to go buying. Tips, avoid like the plague. And you may be saying, why? Inflation's out there, Bob. You don't get it. Inflation's out there. As long as yields keep moving up higher, along with the dollar, tips are not going to go anywhere but down. Dollar we went over already. Euro. This is a reason to believe that we may get a lower low here on the euro and a higher high on the dollar. Euro broke down this week. As for the yen, it broke support. This is what's going to keep a bid under the US dollar if it doesn't fade tomorrow. VIX, we spoke about already. This is a weekly chart, though. Very close to a breakout here. Dow Transports, very close to a breakdown. Remember, a couple of weeks ago, I was saying, this is not going to last. This is not going to end well. Poof. Dow Jones Industrial Average broke out 3 weeks ago, 4 weeks ago. Now it's got to break down. Volume not too bad. S&P 500 weekly chart down 2% on the week. Feels like more. Volume light. Let's go to a daily chart here. It's not a daily chart, Bob. Neither is that. That's not even S&P 500. I'll get it right eventually. There we go. So what we need to start thinking about here is support levels. And I just got some messages from my live. Can you still hear me and see me out there, folks? Seymour Rivers, it went lower today than 1900. Oh, this is a 1 minute chart. Hold on. No, it doesn't show that on my chart, though. Thanks, Seymour. Okay, so what we want to do is we want to get prepared for a rally. So I think that we're probably going to get a rally as soon as tomorrow. But that doesn't mean that we're not moving lower first. And ideally, we do move lower and we bounce in reverse. We could be heading down to 443. No, 429. 429. And I want to be a seller of put options into that crescendo selling. I think it's coming very, very soon. Now I'm going to pause there. And people may be thinking, wait a minute, Bob, I'm not a big options guy, but I hear puts. That to me means that you're bearish. And no, when you're a seller of premium, when you're selling puts, you're bullish because you're the you're the market maker. You're the guy that's out there being the counterparty for somebody that wants to buy puts on the S&P 500 or whatever you're trading. So I have to step in if those puts are in the money, and I have to defend that position. I either have to roll out or whatever, but I have to defend that position. So I'm selling those contracts. I have an obligation if my strike is reached, but I do not want to go near the money. I want to go deep out of the money. So if we hit 430 tomorrow, I'm going to be looking to sell probably down to the 200-day moving average premium at around 410 strike. That's probably going to be around a 10 to 15 delta on the puts. Then what do I want to do? Well, I'm still bearish on the market. So when we get that rally, I want to sell twice as many calls on the rally. And that opens me up a ratio strangle. That's why we've been doing good. We are short of a couple of positions. We're short of the Qs. We're short of Marathon Petroleum, which was up today. We're oil down, but we're up on the trade. We booked profits on Meta last week. We're having a good time here on this sell-off. We're doing good, except for Hawaiian Electric. And what we want to do is we're contrarians. We want to sell weakness, sell premium on the weakness, let the equity market rally, and then we sell calls when we think that, okay, this counter trend rally is done. It's probably not going to go up anymore. Let's get short. Let's get aggressively short. And I plan on when we do begin to move up higher, because here's what I think is going to happen. I think what's going to happen is this, is that what happened back here, right? You had a W formation set up. You had that here, but it got so ugly. This is what you call a rounding top down below 20. And one thing I could tell you, the rallies out of these rounding tops below 20 are ruthless, just as ruthless as the sell-off is when you get a rounding top down below 20. I mean, that's pure conviction selling, right? But when you get that rally back, you're going to get all sorts of shorts getting squeezed out of their minds. They're going to get their faces ripped off. So the last thing I want to do is go shorting into this setup. That's a sucker's play. Sure. Can I get a couple of points to the downside here? Probably. Yeah. Is it worth it? No. So what I think may happen here tomorrow is that we open down, then we find support at or around 430 on the S&P 500 or the spiders, and then we rally on the day. If we rally on the day, I'll be selling call contracts after selling put contracts in the morning. And that sets us up for the coming weeks. But we always want to have liquidity. A lot of people right now are getting burned. They're getting hit with margin calls and whatnot. Not us. We have liquidity. We're able to strategize on what we want to do. Qs, daily, because we saw this coming. Anybody that's on this channel, most of the names I see on here are here all the time. So we've been talking about this for a while now. This is no great shock that this is happening. Now, the Qs, which we are short of, using put options and the SQQQ, we're probably going to look to lighten up here pretty soon. Book some profits on the short side, sell some puts. I don't think on the Qs, because I don't think the IV ranking is attractive enough. I could be wrong. Maybe it's goosed up a little bit here. But I'm looking at names like Meta. They have good premium. Oh, QQQs, they now have pretty good premium. So I may be selling put contracts on, put contracts on the Qs as well. Good stuff. And when I sell these put contracts, folks, if you're an option seller, you'll know what this means. I'll be looking at 10 delta puts. When we rally, I'll probably be looking between 10 and 15 calls to sell. The banks broke support on the week. They look like they are going lower. Very light down volume, though. Technology, bearish key reversal. Stokes declining, rallies fade, right? So what do? They rallied it last week, this week, faded. Avoid. Semis, crushed. Breaking support. I shouldn't say crushed. It's hyperbolic, down a 0.5 percentage point on the week. That's not crushed. LABU, of which we do have a position here. Crushed. Leveraged ETF, though. It's not a big position. Staples, crushed. down 2.75%. Discretionary names finally broke support. Volume is not high, though. I got to tell you, I still think there's a lack of institutional selling. Now, this chart here is what else we're going to want to be buying when the dollar and bonds go lower. We want to be buying emerging markets, not solely U.S. stocks. Those days are gone. We want to be buying emerging markets because a declining U.S. dollar is a tax cut for emerging markets. Energy, of which we have a short position right now on Marathon Petroleum. We're doing okay with it, but I'd like to see more weakness here. Daily chart. I think we'll get it. We're up today, but we faded on the day. Volume was good, but a lot of it was selling. Let's see how we close out the session. 30-minute chart. Not good. So it looks like we may go lower here. Big volume into the close. Let's bring up that stock we're short of. Looks very similar to XLE on a daily chart. Not a great close. All right, so that's good for us. A lot of buying into the close, but a lot of that was selling. 5-minute chart. Yeah, they sold strength. This is what you want to see if you're short. So good. We'll stick with our short here. Oil pulling back. That's good for the consumer. It's good for us because we're short of MPC. Gasoline now pulling back. Nat gas, we have a position here. The pressure's been taken off of us a little bit. Still bullish longer term. Gold, we went over. GDXJ, gold mining stocks, broken support this week. I like 32 on the GDXJ. As for NUGT, which we're looking to buy here, we sold it back here. We're looking to buy it back down here. Light down volume. I want to spend a moment here. Daily chart. So when this was rallying up, I mentioned to members that I expected to see a rollover here, and that's why I put this blue line to memorialize it. And we got it. Bloodbath. So if you bought what appeared to be a setup here and you ignored momentum, it didn't work out well for you. So I think we're coming down to probably 27. And I'm probably going to be a buyer down there. When I say buy, I'm not necessarily going to be looking to buy the common stock. I'm going to be looking to sell puts because I want to get a discount. I'm probably not going to go out 10 delta. I'm probably going to go maybe 30 delta because I want the stock. So I'm willing to take a little bit more risk. I just don't want to buy right here, right now, without having a higher low and a higher high on NUGT. Right now, it's still very, very speculative. Silver, holding support. Silver miners, crushed. Tesla, I would love to sell premium here, folks. I can't. There's just no premium to be had. I can't believe the IV ranking is 9%. This is what you call an IV trap. Because think about it. You sell puts here, right? Tesla collapses, say, $30 in a day. Implied volatility spikes up higher. So you can't get out of that trade without paying up to get out of that trade. That's why you don't want to buy, or excuse me, you don't want to sell premium or puts on a stock that's got a very low IV ranking. So be very, very careful. That's why we're not selling premium right now on Tesla. Now, there are other names out there like Microsoft. We're already positioned here. In fact, we rolled down calls today on Microsoft because I think it's going lower. This is the weekly chart. We're down 1%. Let's go to the daily chart. We're probably coming down here to minimum 314, 350, 313.50, quite possibly down to 305. Now, what I'm going to be looking at tomorrow is Meta. Meta is getting annihilated. Now, we took profits off the table, and I was making a ridiculous amount of money on time decay on Meta as of Monday when we closed out the trade because expiration is coming very, very close. I said, you know what? It's not worth the risk because it flirted with $300, breaking $300, and then it bounced. And I said, you know what? I know if they break 300, they're going to drop this thing like a rock. So on a rally, I got out of the Meta trade. We booked profits, made a lot of money on it. And what did it do? Broke support at 300 and never looked back. So my strike was at 280. I had 10 contracts to the put side. I only had 10 contracts to the call side, not enough to make me really neutral on this trade. So I'll tell you right now, were I in this trade still with only $5 to go between my strike and where the shares closed today, and looking as though this stock is going lower, I would not be sleeping well tonight. I would be kicking myself for not taking the profits off the table because right now my profits would have gone poof, evaporated. Why? Why would they have evaporated? Well, price went against me on the put side. And when you take a look at the IV rank, take note of current IV percentile, 9% on Tesla. But look at Meta, 33%. So the IV ranking is moving up higher. So it's going to cost more to buy back that position. So now what we're looking to do is I want to see another washout here on Meta. And as these stokes become very, very oversold, what I want to do is I want to sell premium, probably right down here at the 200-day moving average at around, let's call it $200 a share. I want to get real far away from this price. We're probably going to go out 45 days. And then on any rally up, we are going to sell twice as many calls as we have puts on the table. That's a ratio strangle. This is the strategy that I plan on using, along with just being short of the Qs in this sell-off. And then we plan on going completely to cash, taking an evaluation of the market. If it looks cheap, looks like it's bottoming out, we have a washout day, we're going to get very, very long for a counter trend rally. I think that's it. That's about it. Let's do some chart requests, and I will call it a night. All right, so I didn't check the members area, which would be helpful. Okay. Donnie's busy today. Whoa, look at this. Making me work. VALE. CSX. Plug Power. Pete, FATE. Okay. Gold 1889. I'm not sure what chart are you looking at for that? I didn't see that. I didn't even see that in the pre-market trade. You're talking about GC, the futures contract? I mean, that's the best one out there for intraday performance. 1889 is way down here. Where'd you see that? Where's that coming from? Okay. Let's begin. Folks are going to be using TrendSpider Automated Technical Analysis. Link below. 35% discount. Okay. Google. Alphabet. Sorry. I got to log back in. Okay. All right. Let's do it. Wow, Google's up on the week. What's that all about? What's that all about? Ivy rank is good here if it's selling premium. But I wouldn't want to sell calls on this. This looks like it wants to move up higher. Weekly chart. This is a good looking chart. Momentum is rolling over. We're down on the month. We're off the highs of the month, I should say. Well, we are down in the month. I wouldn't buy it here. But I'll tell you, if you get a washout in this market, the first stock I'd be looking at is a breakout on Google because it's showing relative strength. So I like it here. I wouldn't buy it though. You got to let this market wash out, and let's see if money rotates into Google. Money rotated into today. Volume was pretty good. There was a lot of selling as well. Let's be fair. Let's see the quality of the close. 30-minute chart. I wouldn't be a buyer here. You have too much overhead supply here in a weak market. I would be on a counter trend rally. I'd be looking for this to break out, and I'd be a buyer on that rally for a quick swing trade. So, stochastics, what are they doing? They're trading down below 50. I wouldn't buy this stock right now. I would watch it very, very closely. I would set up an alert up here, breakthrough. And by setting these alerts, it keeps you from doing stupid things. Wait for the alert to fire off, reevaluate. If it looks good, go for it. If it doesn't fire off, it's not worthy of your time. Okay. Next chart up. VALE. Hmm. Mm-mm. You may get a bounce here, but I think this is dead money. I think you're coming down here to $10.50. I would not be a buyer here, Donnie. I would be careful here. We broke down below support. They tried to recapture it today. It was rejected. I think you can get a better price here. It's pretty oversold on Stokes. You may get a pop, but I'm not liking this setup at all. To the long side, to the short side, that's probably the better bet. Sean, I got you. All right, guys. I have only 10 minutes to go. I have a bunch to go over. So I can take more. Like Tom, I'll get to yours. I'm gonna have to cut it off there. Members, you can still ask for them. I'll spend as much time as I need for members. I value everybody, but members pay good money, so I need to be there for them. And I have a hard stop too. Um, CSX. The transports are breaking down here. This is a railroad company. We have the economy's slowing down despite what the Atlanta Federal Reserve says. We are about to break here on CSX. I would be a seller of the shares. We're putting in lower highs. The only thing we haven't done yet is broken down to lower lows. I think that that's coming. Weekly view. We have broken down below support, weekly time frame. One trading day left to go. Volume is dropping off week over week. But again, one trading day left to go. Might you get a counter trend rally here? Sure. I'd be a seller up into $30.93, and then I would fade the stock. I think it goes lower. I would avoid this. Plug Power. Monthly chart. Holding on by a very, very thin thread. Weekly chart is already broken. The path of least resistance is to the downside. I would not be a buyer here. You have a volume shelf immediately below, right here, at $8.53. Matter of fact, we closed right at it. If that breaks, we're coming down here to $5.85. I would not be a buyer of these shares right now. I would wait and see how we close out the week. Daily view. You may get a pop here. If you want to swing trade it, buy it on a breakout above 870. You're going to have resistance immediately above, though, at about $9.30. Not a lot of upside potential here on Plug Power. So just be careful, please. Fate. Never heard of it. Penny stock. A little penny stock. Speculative buy at $1.68 at the lower band of this volume shelf. If it breaks that, it's going a lot lower. If it breaks that support level, it's going down to $1.28. So you're probably at a near-term tradable bottom, but it's got a long way to go before it recovers to be an investment. Unless you love this story, I never heard of the company, so I can't speak to the fundamentals. I can only speak to the technicals, and the technicals is still weak, but you're nearing a support level that you could trade off of it if it holds. Whoa. So for your gold price, Seymour, you're using trading. Is that the name of the site, Trading Economics? I never heard of them. I go by the spot price. I mean, that usually doesn't lie. I'm not sure what, maybe they're looking at Hong Kong gold and priced in dollars. I don't know. I can't speak to that. But on the U.S. exchanges, the futures market, it's not showing an 1800 print on gold. All right, Philip Morris. Wow, this thing's been left to dead, huh? And it's going lower. It's broken support. This is dead money. You may bounce here off of the lower band of the Keltner, but I think that this ultimately gets resolved to the downside. What's this thing yielding now? Nice premium. My guess is that it's safe. Almost 9% premium. Not bad. Very attractive. But I wouldn't be a buyer here yet. I think you can get a better price and higher yield. Daily view. It's looking pretty good on a daily chart. I think you need an overshoot below 42.50, and then you want to see a trade intraday down below 42.50 and then close back above it. Buy. You got it, Sean. Anytime, pal. I'm looking at bid. Maybe you look at the edge. No, you don't look. No. You look at the last trade. You don't want to look at the. You don't want to look at the bid or the ask. You want to look at the last trade. If there's no trade, I'll bring it up again. We go by the last, right? So the lowest low, tradable low here on the day was 1914.20. That was the last trade, the lowest trade of the day. So the bid ask, that's probably honestly, it's probably a whatever data feed that they're using there is probably not a very, very high quality one, and it could be very, very thin volume traded on the exchange they're getting their data from. Therefore, the bid ask spread could be a mile wide. So be careful of that, please. Okay, Regeneron. It would help if I typed it in accurately. Again, I'm going to try that again, folks. Without a net. Without a net. I'm going to try that again. There we go. Looking good. This is a refreshing chart. Weekly breakout. Be careful here. That's a monthly breakout, actually. Sorry. I stand corrected. A breakout on the monthly chart. You're at weekly resistance, though. So just be a little bit careful there. You got some overhead supply. Daily view. I'm liking it. I think that this could be setting up for a wedge formation, breakout, whatever you want to call it triangle, whatever you want to call it. Call it cupcakes. It looks like it's going to break out. Anytime, my friend. Anytime. Last chart up. GDXU. Okay, so this is a leveraged ETF, 3 times leveraged ETF. I'm gonna share this with you because I fell victim to it. All right, so in 2020, during the COVID sell-off, I owned NUGT, and while we lightened up early on in the sell-off, we still had a position in it. And it was a 3-time leveraged ETF at that point in time. It broke. And now at 2 times. This is still a 3 times leveraged ETF. Remember, each day they need to match up derivative contracts to set the price for these leveraged ETFs. It's very complex. They can break. So be forewarned, and there is time decay. So GDXU, this would be a long gold mining ETF, and it's broken support. It's probably coming down here to $28.17. It broke weekly support, 1 trading day left to go. Maybe it'll bounce tomorrow. But these are now entering that attractive zone. Not overly bullish, but attractive. We want to start flirting with them. We want to walk them to the door. We don't want to ask them to come in because they may not go home. Understand? We just want to flirt with them right now. That's it. So we're getting there. And again, I would not be a buyer of these shares. Neither these shares, NUGT, GDXJ, it doesn't matter. What matters is the higher low and a higher high. We haven't even put it in the lower low yet, the final lower low. So patience, I would rather sell puts right now. I think August 22 will bottom gold to 1863. Well, you only have a couple of days there. The only thing I'm going to say is this: you could be right. You know, I could have my opinions. You could have your opinions. We could both be a mixture of right. There's one thing that only matters here, and I cannot emphasize this enough. If you're going to buy gold or the gold mining stocks, I don't care if yields are going up or they're going down. Doesn't matter to me. People don't understand that gold can rally with yields. Happened to the 70s into the early 1980s. I've studied it. What must be going down for gold to rally is the US dollar. And if the dollar, when it hits 1863 on spot on around August the 25th, I am not going to be a buyer unless the dollar is in decline. So please be very, very careful with these trades too early, because if you're too early in this type of market environment, you will have your face ripped off. So please be very, very careful. I've been somewhat more bullish because I'm seeing opportunities out there this evening. I still see opportunities to the bear camp because I do not think that this is over. We're just getting ready for a counter trend rally. That's all. So we're setting up right now. What we're setting up for is our next tranche of shorts. We want to sell puts into weakness, and then on a rally, we want to sell calls. Twice as many calls versus puts. And closer to the money on the call side than to the put side. We want to be biased short, not aggressively short, but short nonetheless. So we do well in this environment. We keep building liquidity. That way, when the bottom is in, we go to work. That's it, folks. Thanks for being here. Smash that like button. Don't forget the 30-minute chart club. Tell in. 30-minute chart club, link below. Don't forget 14-day free trial offer. Join us. Learn how to trade the charts. Learn how to trade options. And learn how to profit into this market decline. Talk to you soon. Be well.